Welcome to Invest, talk about investing, finance, and professional development. As the current time of November 12th on Sunday at 2:03 p.m. on the Eastern Time. I'm still based in New York, and sorry for being a little bit absent for the last. I don't even know how long. It's been a while. Let's take a look how long I've been absent for. I think I've been away for probably a couple quarters. If you take a look at the video, the last time I posted was at 85 days and 2 hours ago. So, and I've been losing subscribers by the days, down 59 subscribers in the last 28 days. So apologies for being missing. I was really trying to like get my bearings with respect to establishing my business, and the market has been interesting, as to say the least. And obviously on a day-to-day basis, I run a venture capital fund, and I was very happy to have established $105 million fund. So now I'm just actively looking for investments to be supporting founders. So if you are a founder or an aspiring entrepreneur looking for funding, feel free to like reach out to me. I think the best way to get my help is via my Patreon. Subscribe to it. The link is below. And the investments that I typically do would be as small as $500,000 all the way to $5 million checks. So happy to tell you more if you guys are interested. But go back to the typical sequence of events that we like to talk about, which with respect to this channel, will be to talk about the crypto market and also with respect to the equity market, right? So, with respect to the last couple of months so far, as you can see, we've been, kind of have a tough, experience so far. You saw some elevations, but subsequent to some declining acceleration that's been happening due to some, with the rate hikes, also with respect to the war with Gaza. But in the recent time frame, we have seen some major updates on the crypto side, which translates into some level of market reversal, and this is applicable to across the entire crypto market, leading by Bitcoin. But on the macro spectrum, on the overall financial market, you also have the Q4 effects that we are currently experiencing, the Santa Claus rally that is happening in the, I would say, the next couple weeks ahead until we hit end of the year. So let's take a look at the technical to see what's going on and what's the right move for us to be proceeding going forward. So with respect to recording time of 2:06 p.m. on the Eastern Time, happy Sunday by the way, and again apologies for being absent. It's not my intention to be away. It's just that my schedule gets a little bit crazy sometimes. If you follow my Instagram, you know that I've been doing a lot on working on my fund. So again, if you're looking for investments, funding, happy to have a talk. So just feel free to reach out to me on my Patreon, subscribe to us. That shows a lot about conviction, and happy to have a discussion. So let's dive in. So you can see that right now we are at the 2052 level, which is 2050 level. And in the last weeks and months, right, you could see that we were at the bottom of the 1550, which we have approximately almost crashed down to the next level of 1450. But you could see that the 1550 mark is a relatively substantive support level. And as we consolidate, with the market reversal stem from the macro catalyst on driving the reversal of the overall market, stem from the Bitcoin updates, the ETF that was launched. It drive a lot of institutional but also market enthusiasm. And with that being said, and also on the technical front, if we were following the technical spectrum, we were also forming a golden cross on a daily perspective at that time. So as it go up, you could see that we went up to a next level of support, which is 1750, which a support is a prior resistance level. Resistance level translates into a support level, and that drive up even further and up, right? And you could see that with respect to the technical, we drove up because of further news, bullish news around the Bitcoin ETF as well, which translates into well, firstly, some delay effects because Bitcoin pumped up first and then Ethereum will follow through from there. It's like the brothers and sisters type of effects, like the older brother and the younger sister's effects, or younger brother, older brother. I'm kind of butchering the analogy. But with respect to what's going on right now, like, is it a logical level for us to get in? Let's take a look, right? So you can see that on the golden cross, we've been crossing up for quite some time. We almost broke down, and you can see that right now we are, on an RSI's perspective, 71 out of 70. MACD is extremely extended. And take a look at on the weekly. It is also moderately extended at 65 out of 70, but we know that the resistance level that we will get rejected is gonna be somewhere around 20,150. So if you date this back all the way, you could see that we got rejected a while back in sometimes in April of this year. So we basically coming back into it, but is that a sufficient pressure for us to get above the 2150 level? The answer would be slim, right? Because of the extensions that we're in right now. So on the weekly, you could see that we are also quite extended, and on the monthly, you could see that we are, moderately on a neutral level, gliding up. So the guidance right now is the risk is relatively high. So do I suggest buying at this level? I would say it's relative, right? But we definitely have had a lot better opportunity to be buying when we were golden crossing at one point, and that when we were a much lower resistance level before on the RSI perspective, right? So let's take a look at the Bitcoin side of the spectrum. You can see that on the daily, we are also quite, had a relatively sizable leap up because of the, again, Bitcoin ETF translation, and then drove up, and we're at the 80 out of 70 right now, quite extended. So risk is quite high. On the weekly perspective, you can see that we are forming a golden cross, which translates this, but we're also at the 75 out of 70, so quite extended. But let's take a look at where's the resistance level that we get rejected. Excuse me. Technically, it's at the level that we are at right now, at $37,000 level. So not ideal to be getting in at the level that we're at right now. Let's take a look at the monthly. The monthly is showing comparable type of sentiment, quite moderate in terms of the extension, but this is on the wrong side of the spectrum. We have leaped up for quite some time now, but if you look at the comparison, daily, weekly, quite extended, and frankly a little bit bearish. The monthly is kind of stale at the moment, so this is translating to a negative, positive, well, pseudo positive, which translates into a negative. So no go in terms of buying at the level that we're at right now. So let's take a look at the technical level on the equity front. I think the best one would be take a look at the SPY. So let's take a look at SPY real quick. SPY is at 440. So right now daily is quite extended. We're at the 62 out of 70, but luckily we have crossed up above the prior support level at 436. So the likelihood of actually keep going because of the Santa Claus rally is actually quite likely. So for us to see a year-end bull market, like all-time high on the equity perspective, is actually not that illogical. I think it's very likely that we will. I think several different analysts on Wall Street has also depicted this before. And the reason that you're going to see like further elevations, firstly, because many fund managers at the end of the year, they like to pump up their market, their portfolio to make it more rosy than it is for the sake of a return, right? To show that at the end of the year, they actually, average it out for the rest of the year looks quite good, right? So it's more of a artificial pump effect rather than an actual profitability or profit generating perspective events, right? So something to understand. But with that being said, with the institutional buying activity that will be more indexed at the end of the year, it would most likely translate to an upward swing. Take a look at the weekly. The weekly is also bullish right now. You can see that we're about to form a golden cross, and as we form a golden cross, seeing it higher than the end of the year for above 463 would not be impossible for us. And then on the monthly, unfortunately, it is showing an opposite effect. That what this is saying is that as we go up for the end of the year and possibly even reaching all-time high or above all-time high, the next year we are gonna see some pain around Q1 and Q2, but that replenish, which is what you need to kind of fix, right? You went up and you kind of looking for a cross section downward right now. That's a death cross. It's gonna show that we are gonna see some pain ahead, but moderate, small pain, and then as that being said, we replenish and then we can keep going up from there. So again, your all-time high year end is possible, and on the early next year, that's something that the likelihood of actually going down and correct down to around the same level that we are at right now would not be that illogical. Okay, so appreciate you for joining me again, and for those that sustain the subscription so far on this channel, I appreciate you. And I do have to focus on my mission and my North Star, which is how I my day job is to run a venture capital fund, and with the timing that I've had, it's been tough. But I will try my best to be more accommodating. But if you obviously subscribe to my Patreon, you'll have my attention, right? And thank you so much for the ones that stick through with me so far. And hope you have a good weekend. And I appreciate you. And take care. Bye.